Hello and welcome to Trade Finance Talks. I'm Mark Abrams, a director at Trade Finance Global. Welcome to the Future of Trade by Standard Chartered podcast series. We're going to be looking at practical, on-the-ground insights and translating these into forward-looking analysis, all in and around trends in trade. Today, we're going to talk about Standard Chartered's latest Future of Trade report, which follows the theme of resilience, unsurprisingly given the turbulence in the industry this year. I'm joined today by Sofia Hammoucha, Global Head of Trade and Working Capital at Standard Chartered, to go over some of the key findings from the report. We'll also discuss her own outlook on the future of trade. Sofia, welcome to Trade Finance Talks.
Thank you, Mark. I'm glad to be here with you.
How are global corporates approaching resilience in a new normal of uncertainty for global trade?
We can certainly say that global trade is possibly going through its most turbulent decade, and this year has been quite interesting. Supply chain shocks, geopolitical shifts, a lot of digitization and rapid digitization are in general redefining how corporates in particular are operating. So as you said, we have surveyed 1,200 plus corporates globally, and what they have told us is that the future of trade is promising, despite obviously all the complexities that I have listed before. What they have told us as well is that they are taking a more, let's say, offensive approach to tackling those complexities and difficulties that redefine global trade for them with a multi-pronged strategy, let's say, with different angles into their offensive strategy around new ways of managing their treasury management. And they are looking more actively into realigning their supply chain from a geographical perspective.
And if we move on to the last decade and where we are in terms of volatility, but tariffs have been the single dominant issue, which we've seen in global trade over the past year. How has it impacted that kind of supply chain realignment and the changes that you're seeing in the market and how they're responding to that?
You are right and you're not right, in a sense that tariff is at maybe the top of the top three key items that are on top of their mind and are redefining global trade in a sense. So obviously, this is the year of tariff, so it's on the top of the mind. But not only. If we look at the top three, which are of equal importance because 53% of the corporates that we surveyed rank these three topics as equally important and in the top three with 53%. The tariff, obviously, is clearly one aspect. But not only, we have emerging technologies. There is more and more conversation, discussion, interest, tests around emerging technologies such as AI, for sure. And then also the global economic growth, because trade is driven by economic activity and economic growth. So on top of mind of the global corporates is what is going to happen with the economic growth.
I think it was over 74% in Nigeria cited tech as the most three important elements in terms of increasing their trade. And if we actually shift to trade corridors, so with all the changes from tariffs to tech to what's actually going on the trade corridors front, where should corporates look at amongst this kind of shifting global trade landscape? What are you seeing?
To be clear, the US and China remains keynotes into the trade ecosystem. So they are here to stay. What is changing is, what is rising is new type of corridors, mostly around intra-regional and also confirming in a sense the to-south trade flow activity that we've seen. So India is really on top of that list in terms of shifting supply chain to India within ASEAN as a bloc, which is a really growing and rising champion within the global trade flow. You have Malaysia and Indonesia as really rising powers. And then the UAE. There's a lot of investments there as a global financial hub, but not only, a global shipping and trading hub more and more. US and China maintaining their core importance into the global ecosystem, but in between rising new powers or more powers than what they have before are India, Malaysia, Indonesia, and then the UAE.
I think one of the points that we're seeing, which is really interesting, is just the lack of expertise in some of these markets in structured finance and trade finance, and this push to set up in terms of new structures because of the demand increase at the moment. And if we kind of move to costs, I saw that over half, and I think it may have been 3/5 of respondents said that there was going to be an increase, it was 5 to 14% in terms of the cost of goods corporates in the medium term. So how should corporates look at the cost of this realignment in the market?
Majority of the corporate, as you said, see an increase in cost. 5 to 14% is not small as compared to what we had before as a stable kind of low-cost base. The difference we see is really regional. So you see corporates from the different regions reacting kind of differently. When you look at corporates in the West, and let's say we take US and the UK, they see really rising costs as a key aspect, but their concern is more around the potential loss of revenues than actually the cost. So their treasury management then strategy will align to that. But when you take a block like ASEAN, with countries like we say, which emerge maybe gaining from the shift geographically of supply chain, I'll take Malaysia, Indonesia, the rising cost is really a key challenge and a core one, which is at the front end of their treasury management reviews and will translate quite substantially into a risk of inflation locally because there is really limited way to kind of pass down those kind of costs. And then for the rest is really a mixed kind of review on nuances of how they're going to manage the cost. Part of the corporate tell us that they will adopt digital platforms, going to run for creating efficiencies and simplification, and they kind of optimize costs from that end by leveraging much more the digital capabilities. Other will focus on things around bigger treasury management, topics around moving the geographical supply chain a little bit further, or that will take really a front kind of angle into their decision around where the geographical shift will happen. So it is a core topic, but the way they react to it really differs from the regional perspective and from a strategy perspective, but it's definitely something that is going to continue to impact the resilience of trade in the future because it will touch all aspects of the ecosystem of trade because you have rising cost of fund, you have rising shipping costs, you have rising resources and headcount and staff costs. It depends on where you shift your supply chain. Definitely a key topic that will drive the strategy around resilience in the future.
You touched on something really interesting in terms of new technology that's being adopted, investment, which we've seen to a degree with the change in the venture capital markets actually pulled away over the last couple of years. I mean, if we actually look at some of the more kind of vanilla tech products that are in the market, then one of the interesting points from the report, there was limited resources. So actually integrating that tech into corporates. So the time for onboarding would be quite long and there needs to be dedicated resource for that. There was supplier reluctance due to data disclosure concerns, integration issues. If we actually look at the technology in trade, with all the changes in global trade, is tech investment being deprioritized, or what's your view on that going forward?
Absolutely not. I think there is that ongoing conversation around the weight between benefits and the constraints or the barrier. And in the report, I think it's flashed out quite clearly around what are the benefits and what are the barriers, and that conversation is ongoing. What is interesting is the numbers around this survey, right? Because 40% told us that they already have a supply chain finance platform. Most importantly is that additionally, 55% are saying that they will look into adopting a supply chain finance platform in the next 1 to 2 years, even if they haven't. I think it's that very interesting conversation around the constraints, but it's more to understand all of that leading into adoption eventually, because the benefit would outweigh the barrier. And why we say that? Because when we look at the benefits, why are the benefits important, specifically from this year and going forward, as we anticipate a continuous sort of volatility in the world of trade. This is not gonna, all this geopolitical situation going on or the tariff conversation, which continues, and the discussion between governments and the negotiation will continue. They are not all completely firmed up. They spend 1 to 2 years on what's going to happen. Those corporates are still saying, I am looking into adopting. I'm doing my assessment, but I'm looking into adopting a supply chain finance platform. Why is that? On the top one reason why they will adopt a supply chain finance platform, when you look at the details, is because they want to improve the way they optimize their cash flow. They want to improve working capital, and they want to be able to pay faster. So that's all of it around monetizing your own working capital. Through the adoption of supply chain finance platform, you can obviously bring in efficiencies in terms of the way you manage treasury, but eventually these are an opportunity for you to drive even more revenues or more cash flow, not just managing your cost. So that's quite interesting when you look at weighing that. And on the other side, it also helps a better integration within your ecosystem and your supply chain. Because one key conversation that is happening, and it started a few years ago, but now is accelerating, is around the deep tier supplier finance, for example. So that's resilience. If you are able to support your tier 2, 3, 4, until 11 or whatever of your supply chain somewhere, that's how you achieve resilience, because you want your suppliers to be able to survive and continue to supply to you. And by helping them through extending funding or giving that opportunity, and the supply chain finance platform brings that opportunity, that's quite a solid answer to resilience from a trade perspective. So obviously there will be constraints. The interoperability is not there between platforms. Is there very limited global platform that integrated everywhere? So there is still a limitation into the ecosystem. Clearly the benefit specifically this period seems to, from what the corporates say, outweigh the constraint.
Hey, enjoying the episode? Tap follow for more. Done? Let's get back to it.
And many CFOs and treasurers, I'm sure, will be listening to this, thinking I've got to navigate through in relation to what's going on at the moment with tariffs. I'm looking at effectively the bottom line. We've also got growth targets that we've got to hit. How can they build resilience? How can they build in what to their organizations, and what can they be doing and focusing on?
We say as well, building resilience is not a new topic, but it's just accelerated in its importance and grew to be almost a board level conversation now, because it's survival, it's about constraint, but also it's about opportunities, right? And then once you say that, then it becomes a team sport. It's not for the finance guys within the corporate to manage it alone, or the procurement guys to manage it alone, or the treasury guys to have that responsibility. Once it's at that level of conversation for the corporates, it is a team sport. That's what we advise our clients. And when we have conversation with them, we'd like to have that conversation with all the different internal partners together around the table. So it starts from the time you negotiate your commercial contract and you choose your procurement, and that's what you choose your suppliers, to the way you look at funding with your treasury colleagues, and then the financial planning for your business. All that needs to come together as not just an ecosystem, but as a team that aligns to one specific KPI, which is building resilience and trying to see together how can you secure that foundation of supply chain towards returns and growth of the business, as well as top line management. How do you reconcile that? But the first thing we say to corporates is really bring it all together around the table. That's much more effective as a shared KPI.
I like this idea of a team sport. So staying on that kind of theme, from a bank perspective, how can you, and how can banks, in terms of the role that you're playing, how can you assist those corporates in achieving those goals?
Talking a bit about Standard Chartered in particular, we are a deeply rooted trade bank in all the 54 markets where we are present. And we've been present for a long time with local presence and really deep knowledge of the market. So that's the first thing we provide our clients, is that deep-rooted local expertise. But that's not enough. You need to connect that globally, right? Because trade is both local and global. And we connect that globally with global business lines and a network management that support that conversation globally for the client. So what we're able to bring is we have that global network that connects all our countries where we are present. And we marry that with the deeply rooted knowledge and access in the market that helps you understand what is going on and do your planning. So when we go see clients and have that conversation, the core things that we are proposing is an advisory, is look at us as partner. Talk to us about your plans, your strategy, your constraints. What are you trying to build? What are the questions you have in terms of shifting the supply chain, the benefit? What's your business plan about? Call on us to give you our view from a trade finance perspective, because the clients are managing trade activities, not the finance side of it. And we are here to partner with them to give them the best finance package and enabler to support their actual trade activity. So that's, I think, is specifically now, all the banks have been talking about advisory and being a partner. I think this is really the most important phase of that partnership to be brought to life with the corporates, where we don't go to put in place lending facilities or a letter of credit type of proposal, but we go and say, talk to us about your plans. what is most important to you. Where are you in terms of managing your resilience? Where are you in terms of conversation around supply chain shifts? Where are you in terms of digitizing your business? What is the most top of mind from a treasury management perspective? And let us bring that together for you in terms of proposal on how you can navigate that most efficiently. But most importantly, how can you drive opportunities out of that? Because it's a difficult time, it's a volatile time, but that's also the best time for opportunities. There are opportunities opening up everywhere, opportunities for efficiency, opportunities for new revenues, opportunities to bring new partners within your supply chain, opportunities to develop and upgrade your digital capabilities. So we look at it mostly from that perspective.
On that point, you're sat across the 54 markets. You've got this bird's eye view of actually what's going on in the market. You're taking this advisory and partnership role. What one piece of advice or many pieces of advice would you give corporate leaders now preparing for the future of global trade and where we are in the market and where we are going forward?
I think maybe two. First one is, it's not really an advice, it's a fact, is despite all the complexities, this is not the first time trade have gone through different complexities. This is a new one, most certainly in a faster pace than before, but that's really the change. There is a bright future for trade. Trade is continuing to grow despite all of this. And there is a saying, I don't know if I correctly, but the water always finds its way down the different stream. Trade is going to continue to flow, and it will find new streams and new ways to continue to flow. If a corridor is closed, another one opens, and that water will go. That's why we are very much focused into look out for the opportunities, not just for the challenge, because it's kind of a mirror. So you see a corridor closing, getting more complex. Look out for which one opens, because there will be a similar one open or many that opens, and we see that quite a lot this year. So that's the first one. Look out for the opportunities, not for the challenge. And the second one is the conversation around resilience is not a pessimistic one, is really a very optimistic and future-looking conversation. Resilience is really a key enabler for success, for growth, and for continuity. So it's not how can I defend my business and build resilience so I don't go back down or whatever. It's about how can I continue to create a sustainable future for growth. So more of a really positive outlook for me on the future of global trade.
Sofia, thank you for taking your time and spending it with us today. Really, really interesting, and look forward to future interesting conversations. Thank you.
Thank you, Mark.